So first of all, why is the Forex market pulse so important? Well, I don't know how many of you actually look at the site finviz.com. I'm trying to bring it up here. There we go. And Finviz, if you haven't been there yet, is a great way to kind of get an overall scan of the market. I love it because it shows a lot of the stocks that I trade. You can get an idea of what equities are doing just at a glance. I love these. I guess they're heat maps. You call them that. You can head on over to futures, do the same thing. And this is really kind of the core of my Forex market pulse in terms of, like I said, why it's so important to understand the connection between all the markets. And we've talked about this before, where I've taken you over to Yahoo Finance and we've looked at what makes up the diamonds and what makes up the spiders and the triple Qs. And it's really important, I think, to understand these holdings, these stocks that are in the equities market, because the equities market is a reflection of the risk aversion and appetite in the market. Well, that's one way of looking at this connection. The other way of looking at it, and this is directly into the futures market. I have no idea why this is being so sluggish today, but there we go. So if you look here, this is the heat map of the futures, and I can see everything from the Dow to the QE and the dollars in here, crude. Now this is a reason. The reason behind my looking at this map is very similar to the reason I would look at an equities map. Are things up or are things down? And what is the connection? So if I see the dollar down, like we see it right now, down at 79, hovering just above the major psych level, I know that commodities are likely to be up for two reasons. First, I want to make sure I see what's happening with the Dow and with the S&P. And at the moment, of course, we're not looking at a market that's open yet. We're not looking at the bell having rung on Wall Street, so these are all pre-market, but the futures markets are open, and that's why we can see the likelihood of whether or not we're going to open up or not. You can see that we're down 0.81 on the dollar index, which is a pretty good sell-off, and it's a sell-off from the 80-decade level, which we'll look at in just a moment when I look at the chart. And I want you to look at the Dow, up 268 pre-market. That's a good chunk of change. What's happening right now? We have some risk appetite in this market. Now, as to the why and the where and the how, well, that's where we can start looking at the headlines. We can look at specific headlines as to what it is that's got the market so happy, so full of risk appetite, and kind of pushing the risk aversion aside that we saw dominate much of last week. So I can get an overall feel for what it is that's going on by just looking at these two heat maps. Then I want to dig deeper, because I need to know about some specific levels and market trends and so forth before I actually get into my Forex. And this is all Forex related. It just happens to also be a part of the other part of my trading regimen, if you will, which is the futures and the equity side. Okay, so is this rejection from 80, is this the beginning of the dollar selling off? And here's the real question. Is the dollar selling off necessarily evidence of risk appetite? In other words, just because the dollar is selling off, should I automatically assume the Dow is going to head up because somehow risk appetite is alive and well? Well, those are things that you need to look at the chart for. So let's jump on over to the chart and at least start with a look at the dollar.